Welcome back. The January jobs report dropping this Friday morning. The U.S. economy adding 227,000 jobs, while the unemployment rate edged higher to 4.8%.
Meanwhile, earnings season is back and is looking like a mixed bag. While tech icons Facebook and Apple hit home runs this week, retail giant Amazon disappointed the street. What should investors make of this week's earnings results? What about the rest of earnings season? So, Dan, what about earnings? We've talked about your concern about the economy. How do you look at earnings, and how does that factor into your overall market outlook?
Well, there's two ways of looking at earnings. There's the GAAP, which is generally accepted, and then there's the pro forma. A lot of these companies are taking money and trying to continue to grow, but at a very low scale. They're mostly buying their stock, which I think is terrible. But some of them have guided lower. Some have said that they expect expenses to increase over the next couple of quarters. So the earnings, they seem great. I just think that the stock prices themselves are fluffy because of expectations, and I think they're way ahead of themselves. So I'm looking for earnings to start to plateau or decline, especially the Dow 30 stock earnings. I think they're going to start to decline over the next couple of years.
Well, Dan's really got an alternative view, not just on interest rates, but on earnings. But that's what makes the market, right?
It does. Well, we come fourth straight earnings growth, right? 4 straight quarters, right? So, but the thing that everybody's talking about now is that border tax. And you got the 100 big retailers, Target, Walmart, saying, wait a second, you really want... And you got the Koch brothers in here, Bob, saying, hey, wait a second, you're going to go back to your voter consumers and say you really want to pay $1.2 trillion more for retail goods? This is such a spiky time right now for earnings, right?
It absolutely is, although the last part of what you talked about is all who knows, because we don't have any legislation yet. It's lobbying to get certain things and to not get other things. In the meantime, earnings are growing 8%. We have not had an 8% quarter in quite some time. 2 of it comes from share buybacks. That leaves 6. I'll take 6 all day long in this low growth economy that we have. And earnings expectations coming into the quarter didn't drop like they usually did. So I think earnings are doing well. Tomorrow might be a different story, but as long as economic growth stays 2+, which it is, I think we're okay. There are 2 things moving the market. One is the economy and earnings, which I think is still green light. And the other is potential legislation. And that's where we use the word spiky. Up and down. Is it going to be? Is it not going to be? Who knows?
Yeah, make markets uncertain and chaotic again, right? Yeah.
Correct. Bob, there's a knock on strategists, and you know this, and people say you guys are always bullish. You've heard it. In fact, I know you for a long time, and you're not always bullish. How do you characterize the market for people that are thinking about investing now that have stayed on the sidelines?
Yeah, so my view is we're only going to get a 5% gain this year. So that's half the normal. So I'm cautiously hopeful. 2 points for the dividend yield, that gets me to 7. If I'm going to win this year, I got to be in the right stocks and avoid the wrong stocks, which is obviously very easy to say. But as long as the economic backdrop is okay and earnings backdrop's okay, I can't see other than temporary pullbacks. We had a significant one last year, January, February, you'll recall. Could have bought all the stocks you wanted at 1850 on the S&P. A lot of people got scared. When we get drops, absent a recession or something worse, I think you need to buy them. We'll get one of those dips, and I would jump in for those investors.
I don't think, Dan, that Trump gets his border tax. I think the Koch brothers, the Republicans, are freaked out. And, look what Reagan did. He didn't need a border tax. You just put a cap on Japanese automakers or whatever, and then the Japanese companies came here and built cars. Maybe they go to that. Yeah. But here, the question is, what do you buy and when do you buy, right? People are so nervous. When do you get in? Do you buy tech right now, given they're in a fight with Trump? Do you buy, the retailer, the consumer discretionary, right? Yeah. So where's your picks and when?
I think we're in the most uncertain times since the late 70s. That's how I'm seeing the 40-year cycle coming into play. And it's almost like musical chairs. Even with the government and the Federal Reserve raising rates, you don't know what stocks to buy, and you got to know where to get out.
So what do you do with your money here?
Well, number one is you need to be diversified. You need to be nimble. You need to make sure that you're working with somebody who knows what they're doing based on what the market conditions are, or you're a long-term investor and you buy the dips like Bob says. I mean,
well, what do you buy, Bob? What do you buy?
So we already talked about the financials. I'm constructive there. Healthcare. The only sector that's down over the last 12 months. All kinds of controversy. What's repeal and replace going to look like? Who's going to tweet about healthcare prices? Meanwhile, demographics are improving. I'm nibbling on healthcare and weakness. Finally, technology, the best sector in the market for free cash flow, strong balance sheets, and when we get repatriation, which I think we will, there's no sector that benefits more than tech.
Dan, if you're right about interest rates, it sounds to me like I should be buying bonds. If you're right about rates this year,
absolutely.
I should be buying bonds with both hands right here.
If you look at
corporate bonds, municipal bonds, high-yield bonds.
The Trader report comes out every Friday afternoon by the CFTC, the Commodity Futures Trading Commission, and the long position by the hedgers or the smart money is the highest in history on the 10-year, and it's at 5 or 7 year highs on the 30-year. What do they know? I write this in my report. What do they know that we don't know? Why are they so long the bonds and the public and the hedge funds so short, who are the speculators? That's a big problem.
I think the bond market's the action. Now, go ahead.
You asked me what sectors would I be buying. Food is going to become a scarce commodity over the next 2 to 5 years. I'd be looking at food companies. I own ETFs that are tied to the food indexes because the weather patterns and demand and the farmers not being able to plant. This is going to become the next problem area which prices will need to rise.
Stay with me, Gary. What we're talking about, I think you're talking about government bonds, not corporate bonds.
Yes,
now Trump is talking about
bonds.
wiping out the deduction, right, for a corporate bond interest, right?
Yes.
So that's going to rock that market, right?
Yeah. Well, there's a lot that Trump has put on the table. And his ideas are great on paper, and Bob and I, we know economics. It looks great in the textbook, but he's got a headwind in front of him. But look at all the people protesting against him and his policies. Wait until he brings this down to the Congress where they have to vote on it, and everybody's got to do everybody favors, and now you can't be a lobbyist for 5 years.
Some food for thought and a sobering view. Great, guys, you know, it's always great to get some good insight.
Yeah, absolutely. Well, thanks again to Bob Dahl and Dan Shaffer. We've got more Wall Street Week after this. Back in 2. Don't go away.